Imagine if you could predict the future of investments. Would you choose Bitcoin or traditional investments? Let's find out. Have you ever wondered how Bitcoin measures up against conventional assets? Today, we're embarking on a journey to unravel this fascinating financial enigma. We'll be juxtaposing Bitcoin, the digital asset that's been stirring up the worldwide economy, with long-established investments like stocks, bonds, and real estate. These time-honored forms of investment have interwoven into our economic for generations. So are you prepared to delve deep and unearth the disparities between Bitcoin and traditional investments? Before we dive into understanding Bitcoin, don't forget to smash that like button if you're excited to learn more. Now, first off, understanding Bitcoin is crucial to this comparison. So what is Bitcoin? It's a type of digital currency or cryptocurrency which was created in 2009 by a mysterious entity known as Satoshi Nakamoto. Bitcoin operates on a technology called blockchain, a decentralized system spread across many computers that manage and record transactions. This not only makes Bitcoin secure, but also transparent. Now, one of the key characteristics of Bitcoin is its price fluctuations. Its value can swing up and down widely in a short period, much more so than most traditional investments. These fluctuations present both opportunities and risks. On one hand, the potential for high returns is considerable. On the other hand, the risk of significant losses is equally substantial. With its potential for high returns, Bitcoin has certainly drawn interest, but how does it stack up against traditional investments? Now let's shift our focus to traditional investments. We'll start with stocks, essentially shares in a company's ownership. When you buy a stock, you're purchasing a piece of a corporation betting on its success. Over the long term, stocks have historically offered high potential returns but come with substantial risk and volatility. Next up, bonds. These are essentially loans you give to entities such as governments or corporations. In return, they promise to pay you back with interest over a specific period. Bonds are considered safer than stocks, offering steady income but typically lower returns. Finally, real estate, a tangible asset that involves investing in property. Real estate can offer a steady cash flow if rented out, and potential appreciation over time. However, it requires significant upfront capital and isn't as liquid as stocks or bonds. Understanding these traditional investment options sets the stage for our comparison. So, how does Bitcoin measure up against stocks, bonds, and real estate? Well, let's dive in and unravel this financial conundrum. Firstly, let's talk about potential returns. Bitcoin, as a relatively new asset, has shown significant growth since its inception, outpacing many traditional investments. However, it's worth noting that with high returns comes significant price swings, making Bitcoin a much riskier investment. When it comes to risks, traditional investments, particularly bonds and real estate, are often seen as safer. These assets have been around for centuries, and their markets are well regulated. Bitcoin, on the other hand, is largely unregulated and subject to unpredictable price movements. Now let's consider liquidity. Bitcoin is traded around the clock, 7 days a week, and can be bought or sold at any time, offering high liquidity. Traditional investments like stocks and bonds are typically traded during business hours, while real estate transactions can take months to complete. As we explore the advantages and disadvantages, we find that Bitcoin's potential for high returns and liquidity is tempered by its price swings and regulatory uncertainty. On the flip side, traditional investments offer stability and regulatory protection, but may not provide the same level of returns or liquidity. Therefore, the choice between Bitcoin and traditional investments hinges on your risk tolerance, investment goals, and time horizon. As we can see, both Bitcoin and traditional investments have their own unique advantages and disadvantages. So, which is the superior choice for investment? This isn't a straightforward solution for everyone. Bitcoin and conventional investments like stocks, bonds, and property come with their own sets of pros and cons. With its decentralized aspect, Bitcoin presents an opportunity for colossal profit, although its volatility can be daunting. On the flip side, conventional offer a comforting sense of security with gradual growth, but might not match the explosive potential of cryptocurrencies. Ultimately, it's all about tuning your portfolio to align with your financial ambitions and risk appetite. If stability is your preference and you have the patience for gradual growth, traditional investments could be the ideal choice. However, if you're a daring investor ready to tackle volatility for potentially higher profits, Bitcoin might be an exhilarating addition to your portfolio. As we conclude, if this video was insightful, please do subscribe and tap the bell icon to stay updated with our future content. Bear in mind, the finest investment is the one that resonates with your financial aspirations and risk level. Stay updated, stay wise, and here's to successful investing.